Perfect. I'm just going to, perfect, organize, excellent. And is the chat box open for me to type in the chat box, or do you moderate that as well?
I moderate that, but you will see the comments and the questions from everyone.
Perfect. Excellent, excellent, excellent. Okay, well, what I'm going to do, guys, we're going to get things going here. Really important that I do a few housekeeping rules here before we go any further. We're just going to click record here so I have it on mine as a backup. Okay, so first and foremost, I want to thank each and every one of you guys for being here, especially for the host for putting this on. It's always a pleasure to participate with like-minded traders and being able to join these multi-day speaker events. I'm sure you guys are learning a lot, and you're participating, and you're being exposed to lots of different methods and ways in which to look at the markets. What I'd like to do right now is I'd like to give everybody an opportunity to come and join a very active trading room for free. That's it. It's absolutely free. It's a free pass. It says right there on the homepage of our site, we create winning traders. And without going into too much detail, we run one of the largest futures trading rooms in the NinjaTrader ecosystem in the entire world. We are not affiliated with Ninja. We use NinjaTrader's platform as a result of our software. And we also have some of our tool sets available on the TradeStation platform as well. But if you're interested in learning futures day trading, and you want to trade with real traders, performance verified traders, all you got to do is go to Free Pass. Click on this button right now. It'll take you to a sign up page, and you can trade with me all next week for free. What I'm going to be doing today is I'm going to be going over some of the stuff that we use in our trading room, and I think it'll be an absolute opportunity for you guys to participate and learn exactly some of the concepts, okay? So I'm going to put a link in the chat box, and we can provide that to you guys, and we are good to go. So let's kind of get out of here and let's go in. Let's talk a little bit about why you should listen to me before we go into any of the PowerPoints. I think it's super important. This is an example of a trading performance report. And one of the things I want to point out to you guys is trading futures is probably one of the most difficult businesses in the world. It can be very easy when you know what you're doing, but it can be very difficult. It can be very difficult if you're new to trading, or you don't understand trading, or maybe you're learning something, right? So what I'm going to do is I'm going to just point out a couple metrics. Trading at about a 70% win rate, okay? Profitability, okay? And the reason I'm telling you this is because even the most professional traders have the ups and downs. As an experienced educator, I'll just go in and explain to you. This is an equity curve of the past couple months, right? And this is trading in our trade room in front of a very large audience. So the reason I'm sharing this with you is because everybody always asks about performance and about all that. All I ask you to do is take the wall down and join us for a couple days, and you'll be able to form an opinion based off your own experience. I think that's the best way in which you can go about doing such a thing, and I think it'll be the best way for you to follow along and do what we're doing here. So I'm just going to undock some of the questions here so that we're going into this, right? So we'll go into that. So you can come in and watch me trade. If you want to speak to our traders, by all means, we've got a lot of them. So I'd love to let you talk to them. Let's go in and actually talk about what we came here. I just like to always start with that so that you can form your own opinions moving forward. I think that everybody should learn, and it's really important to learn where you feel yourself fitting. We're going to talk about scanning global assets for day trades. And hey, Casey, how you doing, brother? Scanning global assets means global. Stocks, futures, Forex. Yes, we run a futures day trading room. We run a futures training program. But all of our software and strategies are applicable across global assets. And we design all of our trading systems and our software applications for that purpose alone. So today, my main focus is to show you how you can time entries using an aggressive or conservative approach to your trade setups. Everybody in here almost guaranteed trades some way, in some shape or form, in a different way. You might be trading on different time frames. You might be trading on different markets, maybe different strategies. Some of you maybe are traders. Some of you might be from the previous moderators or from the one that's coming after me. It doesn't really matter what you're doing. Everybody has an entry into a trade system or a trade setup. And one of the things I want to do today is I want to help you break down how you can scan to identify the best way to take either aggressive or conservative setups, regardless of the trading system that you're trading. So as always, we need to cover a quick disclaimer. Please understand the risks associated with the business, and we'll get started with that. So I want to talk a little bit about auction curve theory and understanding location of trades. We're going to talk about using a framework so that you have a rules-based structure around location, structure, and having a permissive action. So what do I mean by permissive action? I mean to determine, are you allowed to take a trade or not? And then we're going to show you how we have a nice fancy application to scan the charts or to scan your scanners to locate those criteria so that you don't have to be looking at a whole bunch of different markets. You could be just scanning for your environment, okay? And the nice part about this is I'll be doing a demonstration on Ninja, but the software that we're going to be showing you today is available on Ninja and TradeStation. So if you're using other brokers like MT4 or Sierra or eSignal, or maybe you're using other stock platforms or Forex platforms, it doesn't really matter. Our software is so advanced that we can only use certain platforms to code it due to the code language that it's available for. And so if you're looking at using the tools, you'll need to have a Ninja or a TradeStation platform for this type of analysis, okay? Now, we do have a discount for the software, but in order to purchase, you're gonna need to speak to a trader. And why do I say that? Well, because you probably got questions I can't answer today. And it's really, really important that you get your questions answered. Not everybody is equal, whether you're trading with small accounts, big accounts, whether you're a day trader or a swing trader. Whatever your scenario is, we'd rather jump on the phone with you, talk to you personally, show you a demo, get on a computer, go over the markets you're looking at so we can make it worth your time, right? There's nothing worse than investing money and joining something that you're not comfortable with because it never feels good later, right? So, and as always, we're active traders. We're the real deal. We do it. So we want you to feel comfortable with us, right? So that being said, let's jump into this. Auction market theory. It really involves three things: location of trades, okay, market structure, and permissive action. So if you do not know where you should be buying or where you should be selling, I do not mean the trading setup. I mean location of the market. So what do I mean by that? Let's give you an example. You've got it. This is a chart of the ES futures contract, okay? The top of the market's here, bottom of the market's here. There could be an uptrend within this area. There could be a downtrend. There could be an oscillating range. But really what the most important thing you understand as a financial trader, and this goes into every category, not just day trading, but specifically for day trading, okay, is location. You must sell things when they're expensive in retail, and you must buy things when they're cheap in value. In fact, it doesn't matter if you are in trading business, real estate, selling financial insurance, if you're running a corner store, if you're running a restaurant, if you do not follow the premise of this, your business will not make money. You must buy low and sell high. I hate that jargon. I can't stand it when a trader tells me, oh, you just got to buy low, sell high. Well, who doesn't know that? Duh, right? We got to think about how, where, show me where, show me how, show me why. Like, don't just say it, right? So one of the things we're going to do today is we're going to use a tool called the auction curve to tell you when you're cheap and when you're expensive. That's what we call curve location. The next thing we're going to do is we're going to talk about structure. Market structure never lies. It tells a story. You don't need order flow, volume, oscillators, or even our fancy software to understand the power of market structure. Market structure is literally the story of the market. It tells you what's happening between the liquidity of buying and selling. So when you can read price action with structure and understanding the importance, you can use that to your advantage for everything you ever do as a financial trader. But when you piece together location and structure, you get what we call permission. You should have a good understanding of what you're about to do before you do it. If you get into the market and you don't know why you're buying or selling, you get into the market and if you don't understand why you're allowed to do something, well, you haven't given yourself permission to do something. Now, people obviously give themselves permission to do the wrong thing all the time. That's why they lose money. You can even give yourself permission to do the right thing and still lose money, but the goal is to lose a little bit of money, not a lot. That's the difference between profitable trading and struggling, okay? So what I'm gonna do today is we're gonna address these quickly and efficiently. So the first thing I wanna talk a little bit about is curve location. We have a software application that uses the auction theory and it looks at structure reversals during the current day and prior days to tell you whether or not you should be a buyer or a seller. If you're somebody that is losing money right now, it's because you're either trading your strategy wrong or you're trading on the wrong side of the professionals in the wrong side of the market, okay? Now, I'm an optimist. I don't believe in negative thinking. I'm all about the law of attraction. I welcome good things into my life, and I suggest you do the same thing. This is a good thing for you to learn retail and value location. It's a really powerful tool because it doesn't matter if you trade our strategies or if you trade Fibonacci, supply or demand. If you're an options trader looking at options change, you should still know whether or not you're in retail or value based off the auction. Super critical. Okay, professionals buy at cheap prices and they sell at expensive. And this answers the question, am I a buyer or am I a seller? If you do not know that, you're at a serious disadvantage. Okay, so let's talk about market structure direction. Structure direction tells us the order flow. You don't need a print chart, which we use, by the way. We don't need an order flow print chart to tell us the buyers are controlling the market. We just need to see it taking out structure highs. We do not need to see an order flow chart to tell us that the sellers are taking control of the market to see structure lows controlling the market. This tells us who's driving order flow. The result of order flow will change structure. So we look at curve and we look at structure. Together, it creates a framework. This framework is what I call permission. You need to be on the right side of location, and you need to understand the market structure to form an opinion or give yourself permission to either be an aggressive trader or a conservative trader. And this is where the premise goes for the rest of today's event. I'm going to teach you the difference between being an aggressive trader or a conservative trader. Both are valid. Both of them can make money. Both of them can be very, very successful. It really lends itself to who are you? If you're somebody that is really comfortable with taking trades because you know your trade setup, then you would normally be taking first touch opportunities and you'd be an aggressive trader. If you're somebody that wants more proof in the pudding, if you know you have a level of support or resistance or supply or demand, or if you're trading moving averages, or if you're, whatever the case may be, the best part about what I'm about to show you is it lends itself to everybody because it applies to everybody. You're either fading the market or waiting for confirmation. You cannot enter a trade any other way. There's only two ways to do it. Getting in at the beginning before the market proves itself, or waiting for the market to prove itself and then show you. Okay, so that's exactly what we've got here. We have a permission framework that is going to allow you to scan every market. And I'm going to teach you the difference between aggressive and conservative entries. I'll show you the 3 trades I took in the trade room today for $1,000. And You guys can see exactly what I'm about to show you and why it's important, and then you can decide if you think this relative to you, right? So one of the things we do is we have scanners. Now, you can also use the chart. So the scanners make it really flexible to scan a basket of instruments. So if you're somebody that likes to look at all the Forex pairs, perfect. You're somebody that wants to look at all the global futures markets, perfect. If you're someone that wants to scan the S&P 500, you can do that if you choose to, right? But how far down the rabbit hole do you want, right? For us, you know, you got 12, 15 markets. I'm sure you got a good opportunity there somewhere. What I think is important, though, is understanding what you're looking for. Are you looking to trade an aggressive approach or a conservative approach? Okay. And this really lends itself well to reversal traders. Who in here has a strategy right now that you're currently successful with? Can you guys type a yes if you're currently trading successfully? Just give me a yes in the chat box. I need to see everybody if you can, or you know, if you have the ability to do so, that'd be great. I just want to know if anybody in here is successfully trading their strategy. Okay. Okay. Thanks to me, Casey says. Maybe let me ask you a better question. Who isn't? Anybody in here not? Just type a no if you're not successful. I'm not here to call you out. I just want to know how many of you guys in here need some help, right? If you're somebody here that knows admittedly that you, when you look in the mirror, you know you need help. That's a great place to be. That's the first place for change. Okay, what I'm here to do is I'm going to show you how to make a change for every single strategy you could ever trade. Okay, so let's go in here and take a look at some examples. Okay, because I really want to get into the charts. I really want to talk about some examples. So if you've ever been in my trade room, or if you've ever been to our website, we've got a copious amount of software applications. We are a 50% of our company's focus is our trading school, and 50% of our focus is designing advanced algorithms for financial traders on a global scale. We design Ferraris. So for those of you that are interested in driving the really, really nice cars because of what they do, you'll really appreciate this. The goal for me is not to boast, it's to tell you that there's a difference between a MACD and a software application. A software application is designed to do a lot of different things for a specific purpose or to solve specific problems. So when we design software, we design it to solve major problems in the market. One of the major problems that I'm here to show you today is most traders don't know where they're expensive or cheap, and they don't understand if they're aggressive or conservative in their entries. Okay, so what you're seeing here is I've got 3 tabs right down here. Crude oil, I've got a Forex tab, and I've got an Apple tab. I'm going to look at a stock chart. I'm going to look at a Forex chart. I'm going to look at a futures market. It don't matter who you are or what you trade. I'm going to show you how it applies to you. Okay, which is really powerful because now I'm not putting you into a corner where you need to do something that I'm telling you. You can look at how this can help what you're doing. And then if you're interested in doing what we do, then you can do that too. Okay, so let me give you an example. Over here, you've got Forex pairs. Over here, you've got futures markets. Inside of each of these scanners, there's 3 columns. There's curve, which is location. There's market structure, which is telling us the story of the market. And then there's permission, okay? You'll notice how it says conservative or aggressive, okay? I'll just tell you right now the difference between aggressive or conservative. When all things are lining up in the right location and the market structure is on your side, okay, that's called conservative. When all things are mixed, it's called aggression. So give you an example over here. If the market is expensive right now, we're trading in retail price locations, and the market structure is going up, that means we're in expensive territory, but buyers are controlling the market right now. There's no question about it. How do I know that? We took out structure highs right here, in expensive territories. That's it. Real simple. We can tell you right now that the buyers are controlling this market at expensive territories. Okay. So this is a chart of crude oil. Okay. This morning, price was cheap down here. Okay. Do you notice how location tells us we're in value? We're cheap. Okay. But structure's down. It's because we took out structure lows right here. That tells me we had a breakout to the downside and the market started selling off. Well, there's no confusion here. It's not a line market. Therefore, you'd be an aggressive buyer if you're buying things. You should be wanting to buy, though. That's the real secret here. You want to buy things as they go lower. You want to sell things as they go higher. People don't really accept that initially because a lot of times they don't know when the market's going to stop. That's the secret. If the market's going down and you decide to buy it and the market goes like that, you're happy. If the market goes down, you buy it and it continues to go down, you're like, I hope it goes the other way. And then if it just keeps going down, you're like, oh man, another loss. Well, you should be wanting to buy. It's just you're probably buying in the wrong locations. And that's okay. Most people are at the mercy of whatever indicators they're using or whatever analysis they've learned up until a certain point. So one of the key things that I like to identify is you need an area of interest. You need some type of area, whether it's support, okay, demand, right? Maybe it's divergence, whatever your setup is. Maybe it's outer Bollinger Bands or Keltners, or maybe it's, I really don't know what you're using. All I care about is telling you that if you're catching the market as it's trading down, but you're cheap, you're an aggressive buyer because you're buying before the market's proven itself. Okay, so let's continue on. Okay, let's keep going here. Wait for it. Wait for it. Wait a second. Look at the dialog box that just took place there. You're cheap. Structure changed to up. Conservative buy. Now, this does not mean you should buy the market. It means you're in a conservative buying environment at cheap price levels. This means that as the market is cheap, we've made a structure reversal in value. That means buyers are controlling the market at cheap price levels. If you have a demand zone now or a support level, maybe you got a support level or a demand zone or a fib retracement, or you've got a momentum signal or a moving average. If you decide to get long now at any one of your setups, okay, you're a conservative buyer in cheap territory. You're now what we call a confirmation trader. So if you're somebody that really likes to have confirmation on your side, you can now scan the market to identify when you're cheap or expensive and identify confirmation environments. If you're somebody that likes to fade reversals, then all you need to do is you need to identify the right location. You want to be buying cheap and selling high. And that's exactly what we did today in our trading room. I'm going to show you crude oil, and then we're going to go take a look at all the markets, okay? Let's go here, text and marker. This is a $650 trade profitable in the trade room today, okay? And I'll just explain what happened. The market traded lower. We open our trade room at 6:30 in the morning, Mountain Standard Time, 8:30 a.m. Eastern Standard Time. And as the market started going up, okay, we crossed into what we would consider expensive territory. Okay. Well, when you're expensive, we want to start thinking like a seller. We do not buy if we're expensive. No matter if the market goes up or not, it's really, really important you adapt yourself to the concept of, okay, let's say you have a shoe business, okay? You can sell them at $5, you can sell them at $4, you can sell them at $3, you can sell them at $2, you can sell them at $1. You're a seller. Let's say you're a buyer of shoes, right? This is 5, this is 1. Would you rather buy your shoes at $1 and sell them for 5 as a business owner? That's a $4 margin. You want to be thinking like that. You don't want to be buying up here and buying as things get expensive. If you do, we don't know the market's going to go any further. We never know how far the market's going to go. Unless you're a momentum trader and you're normally looking for small little bits out of the market, as a trader who understands location and structure, let the market show you what it's about to do. So I'll give you an example. Price came up. Price came up. Right there. It moved up again. I took a short right there. Can anybody tell me if I was an aggressive trader or a conservative trader by taking that entry? Anybody in here? Just by looking at this trade setup, just by looking at the scanner on the top left, my entry there, is it a conservative or aggressive? Look at the box. What does the permission say? It's aggressive. The reason it's aggressive is because I'm shorting in expensive territory, which is perfect. I want to be a short seller when things are expensive. But I'm shorting when the market's still going up. We took out the highs. So right now, I'm like this guy right here, okay, with this shield saying, hey, I'm going to stop you, Mr. Market. I'm going to stop you and I'm going to say, hey, I have the power to stop you. That's what I'm doing right now. I'm trying to say, you know what? My level is going to hold the market. That's aggressive to think like that. And unless you have a very, very strong reason, like an area of interest that has a very high probability of success, you should never want to take a trade randomly. You never want to take a trade randomly against the market because you can get run over very quickly. But we don't take things randomly. This was a market profile area that we were looking to short. So I was looking to take a stance at a value area high on a profile, okay? Market went down, I took a target. I covered half my position, okay? And then I added 2 more contracts because I was scaling into a bigger level. So let me explain this. This second entry, is it aggressive or conservative still? You tell me. Am I being aggressive or am I being conservative at that entry point? That second entry, is it aggressive or conservative? It's aggressive, Marzana says. Exactly, guys. Why? We haven't reversed yet. It's aggressive. Okay? Watch what happens. The market continues. Right there. Look at what happened here. See how the market dropped? Right there. Look at the box in the top left. Right there. As soon as we took out the structure at expensive territories, as soon as we proved that, guess what happens? Now, if we were to take a sell, we would be waiting for confirmation. So I'll give you an example. There was an area of resistance right here that we were looking at selling based off a 30-minute time frame today in the trading room. That's one of our areas of interest. So I could enter as prices going into it, aggressive. I could get in again, aggressive. Or I could wait for the market to leave and then enter on a retest. That's called conservative. Okay. So you had an opportunity to enter right there. Okay. And take the leg out this way. Let me give you an example. Aggressive entry, conservative entry. The same result happened. It's just you're waiting for confirmation. You have to decide as a trader, are you somebody that trusts your system so much that you're willing to get into it because you know it works? I have a winning strategy. We have profitable traders that trade very, very large accounts with very big money. We have hedge funds that trade our strategies. We've got money managers that buy our software. We know our software kicks butt, but you may not even know who I am. And if you're somebody that wants to build trust in your own abilities, you must understand your own comfort zone, your risk tolerance. Maybe there's a 50% retracement, okay? Maybe you're shorting a 50% retracement. Maybe you wanna, if you short that, that's aggressive. If you wait for the market to do that and get in like that, that's conservative. That's waiting for proof in the pudding, okay? So let me give you an example of a couple other trades I took today. I took a trade on the Russell. Let's go over here to the Russell. Okay. Good thing I got out where I did. Look at, perfect example. Another area today that we were looking at taking trades at reversal levels. This was a value area high on a market profile chart. So if you're wondering, hey, why are you getting into that level? Like, we use other tools for our strategy. But if you're not trading our strategy, how can this tool help you? Right? Because this tool applies to every trading system in the world. In fact, you could use this tool with every system, every setup, because it has to do with how you enter trades. It's used for timing. It's a confirmation timing tool. Okay, so what we do here is I'm aggressive taking this short because I'm in retail levels. So I want to be a seller. I'm just doing so against the market right now. The market has not yet proved itself. So let's continue on. Market went up. Market wasn't ready to go up. Let's continue on. Let's continue on. Market kept going. Market kept going. I was taking a bit of heat in the trade. Okay, and then basically I added to the position. I was at another higher time frame level. This was a higher time frame level. This was a higher time frame level. So I was willing to get in. Take a look here. I added to the position again, reducing my cost average down. But every single entry I took, I was aggressive today because I trust the system. But if you're somebody that waits and wants confirmation, guess what you had to do? Right here. 1, 2, right there. You had an opportunity to get in right there. Yes, we do use stops, but we enter on larger time frames, Richard. So this was a levels trade off a 30-minute time frame. So the stops were much larger. It was a bigger trade. Yeah. And basically took the target there. Could have made it a little bit more. But take a look here. There was an opportunity for a retest into the level right here. This is exactly what I'm referring to, right? There's the opportunity for the retest. Instead of entering here and here and here, the confirmation traders that are comfortable waiting, and they may miss the trade, they may not, had the opportunity to still take the same profit out of the trade, just waiting for confirmation. Okay, so let me kind of give you an idea of why this is powerful. Right now, if I told you I am not comfortable trading against the market, if you came to me and said, Sean, I need to build some trust in my strategy still, and I'm not really sure yet I can pull the trigger being aggressive. I want to scan the market for conservative opportunities. Okay, I'd say perfect. You know exactly what you're comfortable doing. I don't even need to know what trading system you're using. All I need to know is that you would rather wait for confirmation or not. And then what I would tell you is that load a scanner and go to your permission column and sort. So I can see right now that the 6E is expensive, okay? The 6E is in an expensive area. Structure is down right now. I can look for a conservative sell. That doesn't mean you're just going to sell our software. It means I would look for either a supply zone, a resistance zone, a momentum short, anything to do with your strategy. Let's go take a look at the euro. Let's just click on the euro. Okay. Well, I can show you exactly when that happened. That happened right here. We were pushing up, pushing up, pushing up, pushing up. It broke right here. That was the opportunity to be in retail. There was a structure retest for a short right there. Now, that may just be price action. If you have a supply zone here, or a Fibonacci resistance, or a market profile value area, or a point of control, whatever your strategy is, our software can tell you right now that you are still in a conservative selling environment. You still have the sellers on your side with structure in expensive territories. If you say, you know what, I want to trade Forex. Okay, well, I trade Forex. Okay, so let's go over to the Forex chart. Okay, let's go and scan permission. Okay, well, let's say if I'm a conservative trader, I want confirmation. The Euro USD is in a conservative environment right now. I can look for retail price levels. Perfect. I should be selling. Structure is down. That means the sellers are in control of this market. Let's click on the Euro. Let's wait for it. Same thing. The Euro USD and the 6E, they match each other. Let's take a look at this one here, the British Pound USD. Interesting. Interesting. Okay. This is an interesting read right now. We're in cheap price territories. The market was coming down, it was coming down, it was coming down, it was coming down. It put in a low and took out the highs. That right there tells a story about what the market is doing. It tells me that buyers are in control at the lows right now, and the sellers are drying up. So what does this mean? This means that I can now start thinking like a professional buyer waiting for confirmation. So then I would actually go into my strategy and I would identify, is there a support level in here? Is there a demand zone in here? Is there a fib level in here? Is there anything for me to want to get long this market? Because if I do, I'm in cheap territory and I have everything telling me that the buyers are controlling the market here. There's a support level right here. Whatever your strategy is, traders, all that I'm here to do today is to teach you how to fine-tune your entry approach. Because I've got a lot of traders that have taken what I've shown them on this example and changed the way in which they trade entries on everything they do. Seriously changed the game. How many of you guys understand what I'm sharing with you today? Just give me a yes if this makes sense to you, right? Let's go in here. Let's just add, I'm just going to add a supply and demand indicator just to keep it simple. Okay, I'm just going to add one of our supply and demand indicators in here just to keep it simple. Okay. Okay. Take a look here for a second, guys. This is just an example. Okay. Right there. If I wanted to buy this demand zone, I'd be an aggressive buyer. Prices were coming down, coming down, coming down. This is the first opportunity for me to wait for price to give me a confirmation environment. So if I wanted to buy this demand zone now, I'm buying it with confirmation. You see that? So the difference between the buyers here and the buyer's there, is you're waiting for proof. You're waiting for proof. It don't matter if you're using a supplier demand zone indicator, a Fibonacci indicator, it really don't matter. Let's go in here and just show an example of, I'll just take the, I'll take the zones off. I'll just add anything. I could add Fibonacci levels. Let's just go in here and add Fibonacci levels. Okay, let's just do that for a second. Let's see if we got a level there. I'm just going to show you examples. There's a level right there. Price comes down into a support level with confirmation. It's sitting there bouncing off of it. Okay, so these are the things that I want to do today. Is I want to share with you. Okay, I want to share with you how you can take any trading system that you're currently trading, okay, and fine tune the entry approach into which you're managing risk. Okay, and you can scan any market that you want. If you wanted to do Apple, okay, Apple right now on a 5-minute chart is in expensive territory, okay, and it's got structure to the downside. In fact, Apple today, okay, off the open, closed down in expensive territories. There was a supply zone up here near 200. Price came back up to retest it and hit it. This retest right here towards the end of the day was a short from this environment. Right there. Retail, okay, in resistance. Price came back up to retest it and dropped down. Now, you might not be an Apple trader. You might not even be a stock trader. It don't matter. So one of the things that I think is important is I don't expect you to understand everything in one event. It's absolutely naive to think that anybody can learn an entire concept or a new concept in one event. But what I can assure you is this, okay? I'm going to go here back to the website, okay? If you take a look at our site, neurostreettradingacademy.com, okay? If you go down under the software tabs, if you're a NinjaTrader user, I really encourage you to just go to free indicators. There's like 12 or 15 indicators on our website you can have for free. Just sign up. Just go there and just download all of our free stuff. That's a good place to start. Another thing you can do is go to our software tab and take a look at the auction curve tab, okay? The auction curve is what we're talking about today. It's one tool set. I'm going to put this link in the chat box for everybody to have, okay? The auction curve is a tool set that is designed for not taking trades in the wrong locations, okay? Not taking trades without confirmation. Now, we use it in combination with other tool sets. So the best thing that I can do for you is if you're interested in using it now, we have an offer at the end of the event. Okay, we'll give you a discount and you can sign up and you can do all that fun stuff. But I really think you should join us for a couple days in our trading room. I think that's where the magic's going to happen. If you're a futures day trader, I think that's where the magic's going to happen. Okay. So what I'm going to do is I'm going to give some software away right now. We're going to give $1,000 worth of software away. So basically, everybody who came here today is going to be entered into a draw, and then we're going to pull a name. Ashley's got a way in which we can pull that and we can scan it. Just for being here and listening to me and all the other presenters, I just think that your attendance is very appreciated. There's obviously lots of stuff online you guys could be bombarded with, but I think that you know, at least we could do is put you in a draw to win $1,000 worth of free software. So we'll send an email out with the replay so that you guys can have that. Okay, and more importantly, if you're interested in using this tool, it's an investment. It's an investment into better trading with your entries. It's an investment into better trading with your strategies. Okay, you get it for 2 computers. You get user manuals, training videos, comprehensive applications if you're a NinjaTrader user or a TradeStation user. If you're somebody not using one of those platforms, but you're interested in using this, you could use their platform on a demo account and execute on your live platforms. That's fine. We do give you the scanner templates with the platform. So when you do use the indicator, you'll get the free scanner templates. And if you're not trading on the same time frames as us, then what we'll do is you can update those templates and you can select the fractals that you're looking at, right? You might be using volume charts, range charts, Renko charts, whatever the case may be. We can adjust those scanners and our support team will log onto your computer and help you with that. No questions asked, okay? So I'm going to put a couple links in the chat box here. I've got a bunch of stuff here that you guys can have, and I hope that anybody in here that's looking at reducing risk and getting better at their entries has learned something today. These events are educational in nature, and they're they're designed to instill educational concepts. If you're really interested in learning this in more detail and you really want to apply this in your trading, then that's where you would come on board and you would look at joining us in our trading room and stuff. And if you find that our trading room is something where you find comfort in, well, we have a very low cost subscription with an online program that it comes with, and you don't even need to buy software. You can just subscribe to our trading room and you can go from there, right? And learn from that prospect, right? And we use this tool in our trading room, okay? We use this on an order flow chart. We use it for timing entries. We trade supply and demand, Fibonacci, and we also use it for market profile primarily, trading volume profile levels and market profile levels, okay? But I think for the first kick of the can, for anybody here that's new or interested in learning how to day trade better entries, I think it's a great way to start, right? So hopefully you guys enjoyed the event. Thanks for listening to my presentation. Thanks for the presenters who came before me and who will come after me. And thank you for hosting the event, guys. Anybody that's a customer of ours, thanks for supporting us. I know I see a few names in there. And anybody that's new, looking forward to trading with you next week. You owe it to yourself to come in for 3 days. It's absolutely free. So look forward to having you guys in the trade room, traders. And if you're interested in the offer, the links have been put in the chat box. I'll take a second and answer some questions now. Does anybody here have any last minute questions that you're interested in having me answer or anything like that? I'll just leave this up. And Casey says, you did well, old man. Casey's one of our traders that's done very well. He's definitely growing into becoming a very successful trader. Richard says, thank you, not a problem. So just so you understand, the auction curve, today's scanning global assets for day trades, is used in our day trading room. Our plans to open up programs for Forex and for equities is in the near future. For the most part, we specialize in futures day trading, and all of our other software is designed for all other asset classes, right? The other thing too is if you're interested in joining our trading room, okay, this is super important here. So Giovanni's saying, do you always add positions if it goes against you to average the entry price? Only at areas of interest, Giovanni. It's very, very important you understand that our max risk is always assessed prior to entry for multi-level trading. And for those of you that are wondering about averaging into positions, normally you would never average into a losing position unless your strategy calls for that, unless your strategy is designed to trade that way as a levels trading strategy, and only on higher time frame levels. We never add into smaller time frame levels, yes. And that really reduces your cost base properly, and it's consistently profitable. It's a consistently profitable strategy. Yeah. We have more trading strategies. We have a lot of trading strategies that we teach, but for the most part, let me give you a link to our trading room. So if you guys are interested, I think this is a super fantastic way to start using our tools and get a familiar access to that. So there's a link in the trade room there for those of you that are interested. You can just go to our website and hit trading. It says futures trade room. Vincenzo says, it's full of us Italians in there. Yeah, I know you're there, buddy. Fantastic, guys. Bill says, still learning something new every time I watch and listen to you. Thanks, Bill. Hey, buddy, no problem. Listen, guys, we got a lot of good recaps. So one of the things I like to do every day, and by any means, I am learning how to become a social media influencer. I think that's one of the funnest things you can do. And one of the things you can do is you can watch our recap videos. I put a lot of videos in here on recaps of the trades and the play-by-plays that we do, looking at these areas. And, you know, this week was a very profitable week for me. You know, I traded myself out of a nice drawdown and consistently profitable back-to-back winning days. But we do put a lot of recap videos in here, and it's, you owe it to yourself to come in and listen to some of these testimonials and get a good feel for it. Our main core trading system is here. So we teach a core strategy, which involves several different tool sets. But what we've done today is we focused on step 3. So what I've done today is I've talked to you about timing your entries using the auction curve. And we teach these lessons inside of our trade room ongoing. So hopefully you guys come and join me, and we'll see you next week. Thanks again for having me come in and present to those that are putting this on, market pros, and you know, all of the guys and gals over there helping me and the rest of our presenters put our stuff out to the market. It's much appreciated. Take care, traders. Thanks for watching.